We have since increased it again in the past 4 weeks, but the company is working hard to make sure that every BitMine share has more Ethereum every day. Stablecoins have really been the breakout hit in crypto. We coined it as the ChatGPT moment for crypto because it has become a breakout product.
You think that the Ethereum network or market cap is going to flip with Bitcoin? I'd love to hear you talk about it.
In today's video, Tom, Lee and Cathie Wood tackle one of crypto's biggest questions: can Ethereum overtake Bitcoin? Tom explains how BitMine became the largest holder of Ethereum with over $13.5 billion in assets, and why 2025 could be ETH's ChatGPT moment. Cathie breaks down how regulation, stablecoins, and smart contracts are setting the stage for a blockchain-based financial system with Ethereum at its core. Before we dive in, don't forget to like, subscribe, and join our Telegram for more insights on Bitcoin, Ethereum, and the digital asset revolution. Links are in the description below. Let's hear from Tom Lee and Cathie Wood.
Yeah, about 3 months ago, so 12 weeks ago, I became chairman of BitMine version and led a transformation, as you point out, where the company went from being a small Bitcoin miner to one where it continues to mine Bitcoin on a very small way, but now its primary treasury asset is Ethereum. And in the ensuing 12 weeks, we've become the largest holder of Ethereum in the world. Today, we announced 2.8 million ETH tokens, which is, with the cash on hand, it's about $13.5 billion worth of crypto.
And those of us watching you so carefully as you make these announcements about how much Ether you own, we're also trying to figure out the number of shares you have outstanding so we can understand ETH per share, which I know is a big driver here.
Yes. And we do provide periodic updates on that.
Yeah, of course.
Yes. And but we've done this in a way that has been accretive to BitMine shareholders, because at the start of this process, there was about $4 of Ethereum per share. That's when the announced transaction happened, and the stock price of BitMine was $4.50. And on August 27th, which was the last update, so we're due for a new update, the stock had Ethereum per share of $39. So almost a 9 times increase, almost 10 times increase in those 8 weeks. We have since increased it again in the past 4 weeks, but the company is working hard to make sure that every BitMine share has more Ethereum every day.
One of the questions I have is, our working assumption has been that winner is going to take most here. Is that why you've moved so quickly? And was that your working assumption? Because obviously the number of dapps out there today has exploded. You set a trend.
Yes, in fact, there's, I believe, 70 Ethereum dapps. So it's very large space, but it is, as you coined, winner take most. If you look at trading volume, BitMine trades $2.5 billion per day. And I think increasingly people look at a trading volume as really the critical measure of success for a treasury strategy. It ranks as the 28th most traded stock in America. And combining BitMine with MicroStrategy, the two of us in total account for 86% of all trading volume of global crypto treasuries. So we are the two institutionally liquid stocks.
Before we go on, we really should tip our hat to Michael Saylor and MicroStrategy. Remember how crazy people thought he was for a very long time. And now more and more people are getting it. Why do you think it took so long for the dApp movement to make its way into ETH and Solana?
Well, and if I could insert, like, why do dApps exist at all? Like, why do we need the whole point? If I went back in time and told, Satoshi, hey, this decentralized tokenized asset is going to live in a corporate shell that people are going to buy on corporate equities, you would be like, what is this doesn't make, this is totally contrary to the kind of underlying philosophy of the underlying tokens, isn't it? Like, why do these things exist?
Yes and no, Brett. I think that 2025 is showing you that DATs are coming into existence really because the foundation and the crypto community actually need them. But going back to Cathie's question about like why 2025 for Ethereum, the Bitcoin and MicroStrategy's 2020 pivot made a lot of sense because Bitcoin was only 11,000 at that time. And he represented the sole way to get exposure to Bitcoin for any institutional equity manager.
Well, except for GBTC, right? Because we were in GBTC.
Yes, but for a firm like Capital Research or T. Rowe, they're unable to buy a closed-end fund or an ETF or directly own crypto because their mandates require them to own a corporate equity.
I see. So
Overstock was probably the only way someone could buy Bitcoin in the past. And then MicroStrategy came along. So MicroStrategy is almost 2.0 as Bitcoin treasury. What he's done successfully, of course, is really to upscale it so rapidly because he went from having $2 of Bitcoin per share to over $250 per Bitcoin share, per MicroStrategy share today. So he has created enormous shareholder returns because the security business, of course, has continued to really muddle along at basically zero growth. In Ethereum, I think the moment is really this year because this is the year that Wall Street and governmental regulations became friendly to think about rebuilding on the blockchain. And part one, of course, was the stablecoins, and stablecoins have really been the breakout hit in crypto. We coined it as the ChatGPT moment for crypto because it has become a breakout product and it has created two enormous companies, one being Circle, which I know ARK was an anchor investor in the IPO, and the other is Tether. Tether today is raising money at a $500 billion valuation and roughly 300 employees. That's about $1.7 billion of market value per employee.
Yeah, we featured that. We featured that, Tom, in last year's Big Ideas because we said, oh my goodness, at the time it had 180 employees. We said, there's never been anything like this before. Right.
Yeah.
So you're right.
And so JP Morgan, who just $869 billion, has 313,000 employees or 2.8 million of value per employee. Tether is showing you a crypto native bank is fundamentally vastly more profitable. And that's what I think is happening on smart contract blockchains that are neutral like Ethereum and Solana. But it really only could have started in 2025.
One of the reasons I think the timing was good is, yes, the regulatory changes, critical. Check the box, first the ETFs in the old administration, but now the, unencumbered deregulation, just, tremendous openness to it. And we were having trouble gaining access to ETH for our ETFs, which are not like mutual funds. They have a little more, they have more degrees of freedom, shall we say. We didn't want to use one of the Ether ETFs because the SEC does not yet allow staking. And we tried to gain access through 3iQ and other Canadian ETFs, which do allow staking. But then we were becoming way too big a percentage of those. And we were also subjecting the funds to the risks of bad income. So the reason I asked you about timing is you came along at the time we were trying to figure this out and provided a solution. So I did want to, I asked for that reason because you really did solve a problem.
Yeah. Well, thank you for also investing in BitMine. We are, of course, really working for all shareholders, and
Yes.
we appreciate ARK because of the, I think, knowledge transfer, that happens with ARK and their exponential research. And so it's been great to have you in the cap table.
One of the things you've been saying is you think that the Ethereum network or market cap is going to flip with Bitcoin. Now, Bitcoin is at about, 2.4 trillion now, somewhere around there. And Ethereum is 540 billion. You think there is a flippening, as they might say. I'd love to hear you talk about it, but just to set this up, anyone who's listening to this podcast knows that we have in 2030 a forecast of the entire crypto asset ecosystem. And of course, we're going to be modifying this with time. We're doing our big ideas work now, but as of our last go at this, the ecosystem we expect to hit $25 trillion in 2030, the vast majority of that in Bitcoin. Mostly because we look at Bitcoin as, a global monetary system, rules-based that we've been missing since the U.S. went off the gold exchange standard in 1971. That's a very big idea. It's a technology, obviously, and it is the first of its kind. And we wrote a paper in 2016 on this, first of its kind in a new asset class. So those are three very big ideas. I'd love to hear your thoughts on why ETH or the ecosystem will surpass Bitcoin.
Okay. Well, if I could rewind a little bit to 1971, in our chairman's message last month, we addressed how gold versus Wall Street grew post 1971. So 1971 was when Nixon formally withdrew the U.S. from the gold standard. The immediate beneficiary was there was demand and a market to own gold. And so people would say that was your, first implication. But what we wrote about and talked about in our message was that in 1971, the dollar became fully synthetic because it was no longer backed by anything. And so there was risk that the world would go off the dollar standard. So in stepped Wall Street to create products to propagate the future of Wall Street, including, and we listed, I think, 14 products that emerged over the next decade, from money market funds to credit to mortgage-backed securities to futures, etc. And dollar dominance by the end of that period went from 27% of GDP terms, but to 57% of central bank reserves and 80% of financial transaction quotes. So Wall Street was created products that made the dollar dominant, and the market cap of equities today is 40 trillion compared to 2 trillion for gold. So in other words, gold is 5% of all available assets. And so in 2025, we think everything is now becoming synthetic or tokenized, not synthetic. So as we move not just dollars onto the blockchain, which is stablecoins, but we'll move stocks and real estate, dollar dominance is going to be the opportunity of Ethereum. So digital gold is Bitcoin. And so in that world, we believe Ethereum could flip Bitcoin, similar to how Wall Street and equities flipped gold post 71. Now, that is just our working theory, because I am still a Bitcoin bull. So I'm very bullish on Bitcoin, and I believe your targets for Bitcoin are actually reachable. So we think Bitcoin fair value should at least be 1.5 to 2.1 million, but we can see higher values. But that would, of course, provide upside to a neutral smart contract platform where a lot of Wall Street will innovate of real world assets.
That was an incredible discussion from Tom Lee and Cathie Wood, two of the sharpest minds in finance and crypto. Whether you believe Ethereum can actually surpass Bitcoin or not, one thing's clear: the shift to a tokenized economy is already underway. Drop your thoughts in the comments. Are you team Bitcoin or Ethereum? And if you found this breakdown helpful, make sure to like, subscribe, and join our Telegram for exclusive insights and early updates on digital assets and market trends. Thanks for watching, stay informed, stay early, and I'll see you in the next video.